Hey guys, so today I want to share with you a simple strategy, a simple strategy that you can use to make profits. Okay, and I expect that you backtest it and see if it works for you. Okay, so you can backtest it if you feel like this idea works in your charts, then fine, you can roll with it. If not, feel free to discard it. But this strategy is well put together, and I know that it can give you reasonable profit if you use it. Okay, so the first thing you have to do is to choose a higher time frame, or first choose a trading style. Choose a trading style. So do you want to be a day trader, a scalper, or a short term trader or a swing trader? Okay. So if you're a day trader or scalper, a higher time frame for you might be the daily chart to the 4 hour chart. Okay. If you are a short term trader, a higher time frame for you will be the daily or weekly charts. If you are a swing trader, you know your higher time frame is a monthly chart. Okay. So from a higher time frame, what you want to do is to select a support level. Okay, select a support level or a resistance level. Just a level where price is supposed to move away from. Okay. So now once you get this, the next thing that you do is that you wait for price to hit it. Okay. Then you go to a lower time frame. For example, let's say this your higher time frame is daily chart. Yeah, a day trader. Okay. So your lower time frame now will be your intraday chart, which will be your 1 hour chart or your 4 hour chart. So once the price gets in there, what you want to do is to check for the way that the price moves away from it. Is it a breakup scenario or a failure swing scenario? What do I mean by this? A breaker scenario is when, sorry about this. Breaker scenario is when the price is coming lower, okay, and then it hits a support level like this, okay, and then it springs higher aggressively, okay, and then comes into this area, and from here we expect it to move higher. Okay, so this is the general area where you expect to get your safe trades. Okay, your low risk buy. Okay, this is the safe area to buy it. Okay, this is the best buy here. Okay, and then this is the safest here, but not so good. Okay, this is your low risk, high reward. Okay, and then this is your low risk, low reward trade. Okay, so this is the breaker scenario, and the second scenario is the failure swing, which looks like this. The price comes down into the area, okay, and then it makes a leg up, makes another leg up, okay. So once you get this second leg up now, we uh, we are not sure whether this is going to be a breaker or a failure swing until it happens. So once we get this leg up, we know okay, the area we are buying at is this area, and then we expect it to go higher. Okay, so this is the area of our buy here. It is area of our buy there. Okay, so now when we discover what we have, once the price gets into the support area, okay, this is where you have to be alert for your trade. This is where you have to be alert for your trade. So in this case, we are looking for the other block that you are going to buy or sell at. So in this breaker scenario, the other block you're looking for is always the breaker block. What is the breaker block? The breaker block is if you are trying to buy, the breaker block is last up candle before a down move. So let's say there is a bullish candle in here. Okay, there's a bullish candle in here. Once price comes and drops into that bullish candle, that is a buy for us. With our stop loss a little bit below that bullish candle. All right, and for the failure swing as well, what you're looking for is either the mitigation block or a normal order block. So for this scenario now, price is either going to use the mitigation block or it is going to come down in here, look for something that is in the discount area of this range. So either it's going to be a fair value gap or an order block that is sitting at the base of this move here. So either of those three, either the mitigation block at this point or the other block at this point or a fair value gap within this range is going to act as support for price here. Okay, so what you can do is basically You can wait. You can also use the market structure shift to confirm your entry. So if it gets to one of these points, either the breaker block here or the mitigation block or the other block or the fair value gap in here, okay, all you have to do is that you wait for a market structure shift. So you go on a lower time frame. So let's say this here is the 1 hour chart. You can go down to the 15-minute chart or the 5-minute chart and look for a price move like this, where price okay trends into that your 1 hour or 4 hour order block and then aggressively moves higher. Okay, it moves higher aggressively and forms a fair value gap within this move higher, forms a fair value gap. So inside that fair value gap is where you put your buy trade, okay, and your sell trade. If you imagine the inverse possible inverse case here, okay. So I'm going to drop a demonstration about this tomorrow, okay, a demonstration about this tomorrow in tomorrow's video. So in this is your confirmation for the trade here, right? So once I drop the demonstration, this will be clearer to you by showing it on the chart. Or should I try and show it right now? Uh, okay, I will just show it to you guys tomorrow. Let me prepare an example, a good example for you guys. All right. So I'll end this video here. See you on the next one.